to the Amenity Analytics webinar, Deception Analysis, Spotting Trouble in Earnings Call Transcripts. This is Richard Ortega, the Vice President of Sales and Marketing here at Amenity Analytics. We're going to take a couple of minutes pause just to ensure we get everyone on the line that wanted to join, and then we'll come back to you here in just a minute. Thanks very much. Okay, guys, we're going to get started. Before we do, just wanted to cover a little housekeeping. You know, we have the chat functionality in the bottom right section of your screen. Feel free to utilize that for questions or comments in case you're having some technical issues throughout the call. And if I may ask anyone to just chime into that chat and indicate that the sound is working well. That would be particularly helpful to us. And just say, you know, sounds good, or A-OK on my end, something along those lines. That would be great. All right, without further ado, let's go ahead and jump in. Today, we're going to give you a brief overview about Amenity Analytics. We'll also give you a brief overview about our deception dashboard and specifically what deception is to us here at Amenity Analytics. We'll open things up to Q&A as well. And as I say, feel free to use that chat function to let us know of any issues or questions you have throughout the call. So, you know, Amenity Analytics, we are a fairly young company, founded in 2015. We have just over 60 employees. We are headquartered in New York. We have R&D and technical offices in Tel Aviv. We've raised just under $26 million to date, with our most recent round being a Series B. And we're backed by Intel Capital, Star Companies, as well as Allstate. And interestingly about Intel, not only are they our backers, of course, but they were our first customers, and they've participated in every round of funding, since we got started. So a big shout out to Intel for their wonderful support and interest in our technology. So at the most fundamental, Amenity Analytics allows our customers to transform text into valuable assets. But more broadly than that, the intent here is to benefit our customers' business, our customer stakeholders, and society at large. And while that may sound aspirational, in fact, we have found that we are well on our way to achieving that mission. We have created an NLP platform trained on the language of business, and more specifically and more intently, the business of financial services. In fact, what we've done with our platform is we've gone from a historical process of very sophisticated NLP, which is limited to only the most advanced technology companies and the largest financial institutions with forward thinking and ability to process said data, to a new world where we're able to provide domain-specific information extraction to any business. And ultimately that means we're democratizing world-class NLP capabilities. We're providing that to our customers at speed, at scale, and with unparalleled accuracy. In fact, I could sit here and talk about what we do all day, but really, these are the clients that are currently working with Amenity Analytics and who are singing our praises. The likes of QMA and Bank of America and Evercore, they're writing about us on a regular basis. We've provided custom solutions for some of these other names where we are working with external data, we are working with their proprietary data, and we are delivering that in a variety of different ways, deployed either on-premise, in the cloud, whether private or public, or via our web-based interface. So what I'd like to do is actually introduce my colleague, Derrick. Derrick is going to go ahead and walk you guys through deception and also take some of that Q&A. I'll be here for that as well. Derrick recently joined us as a senior equity research analyst, specifically with a background in academic and fundamental equity research. Ultimately, what he's charged with doing is refining our tools and putting them to the test on a daily basis to ensure that they add meaningful value to our customers. And I think he's got the bona fides. He earned his PhD in political economy at the London School of Economics, where he used text analysis to analyze institutional decision-making. And most recently, he was an investment analyst at a long-only global equity money manager here in New York. So without further ado, here's Derrick William-Vales.
Hi, everybody. Pleasure to be with everyone today, and thanks for signing on. We are excited to have you, and I'm particularly thrilled to get a chance to talk coherently for a little bit about deception, which is one of the toolkits that I've been mastering since I've come aboard here at Amenity, and that I think adds considerable value for anybody who's in our customer base as an interesting tool to keep in their toolbox. At the outset, what I want to do today is introduce deception as a concept and talk about some of the things that we are able to identify inside transcript data to examine why you might care about it as an end user, what kind of things it reveals within text data, and how that might impact your particular investment cases or use cases in thinking about this kinds of transcript data. And we'll turn to a couple of case studies to walk you through some of what I think about as summary statistics in talking about particular company earnings calls, looking at some illustrative examples of text to understand in context what it is we're talking about when we say extractions that are deceptive in nature, and then walking you through some of the toolkits to show how this data can be useful in looking at companies over time, at looking at different companies and sectors side by side, and in thinking deeply about the meaning of text that forms the bedrock of what we're all studying here in sort of the fundamental approach to text world. So without further ado, let's turn the page. At the core, the big question with deception is, have you read or listened to an earnings call and felt that management wasn't giving you the whole story? Our goal in thinking about deception as a topic for scrutiny is in trying to measure something inherently qualitative quantitatively, to put objective metrics on something that's otherwise hard to nail and identify with a statistical level of significance on your own. I imagine a use case here where you might be studying 10 transcripts worth of history for one company, and you might have some margin notes that connect the dots in terms of thinking, oh, that comment seems sort of funny. Or you might hop off a call after taking notes alongside and say, for the most part, that sounded right to me. But we're really giving you that backstop ability to say, at the linguistic and semantic level, are you getting straight answers to tough questions from management teams on these calls? So to do that, we use a deception model that detects and quantifies management behavior to identify these deceptive tendencies. And so the perk here becomes, we're looking at what management says, but also how management speaks. And that's the really big add here. So when we're talking about deception, what exactly do we mean by that? And this was sort of the learning curve for me in identifying what it is we're measuring here in my last couple of weeks since joining the company. And I think it's important to lay out front what we think are important types of deception. Now, deception in this case could be comments that include detours, that are referrals in lieu of direct responses. They might be euphemisms, where statements are overly optimistic or downplaying issues that might matter. They might be evasive, where you get a non-committal response, or claims to lack of knowledge, or the suggestion of no available answer to a tough question, and so forth. I won't bore you to tears with the full readout of all these descriptions, but suffice to say, these are, in our estimation, and those use cases that we validated against, the things that matter most. So false denials, hostile comments, the overuse of negative cliches, qualifying commentary about issues that matter, refusals to answer questions, selective choices of what I choose to remember as a matter of convenience. And then at the very core, stall tactics that we gauge as both weak and strong within these transcripts. These are all the things that you'd be picking up as a daily listener or reader of transcripts, but we allow you to take a step back and look at it from a different dimension that's objective at the core. So just to give you a flavor of what kinds of language we classify into these types of categories and types of deception, I wanted to run through some examples. So we see here a 3x3 grid that sort of sums up the last page, and what I want to provide is the opportunity to run through some of the language that we identify as lining up with these types of deception. Hostility is my favorite one this quarter, and these are all taken from this current earnings reporting season. They're all top of mind for folks who might be covering these companies. But the comment from James Foote at CSX is, Allison, you're killing me. I mean, we're doing a fantastic job, and then you want more? Come on. This might be a joke, but it comes off as a hostile comment to those folks that might not be logged into the call and that might be reading it for the first time, which is the vast majority of folks. We look at things like refusals where management teams might say, I don't want to get into that, John, like Camilleri at Ferrari did this quarter. We might see usages of selective memory where Jamie Dimon hops on a call and says, I don't remember the last time I used my debit card. Or evasive comments where someone says, frankly, it's too early to highlight anything new from what I said back in March of last year. The point here is to say that throughout our process, in terms of using our tools, and throughout the establishing of all these different objective metrics we suggest matter, you have the ability to go back to the text and see in context what it is we're classifying in these categories and interpret it for yourself given whatever your use case is. And that really goes to the core of what we're up to here, which is providing objective insights about data that at its core is hard to interpret and that might be subject to multiple interpretations, particularly in financial markets where there's a buy and sell side to every trade. So to talk a little bit more about the bricks and mortar, we're calculating transparent deception scores at both the extraction and company level. And those scores factor in the frequency, severity, and context of the deceptive language we find in this kind of transcript data. It's important to say here that some deception is normal. Putting the analyst hat on for a second, what we know is true is that management teams go into earnings calls with a story to tell. They have the prepared remarks to make their case to analysts, and then they get peppered with tough questions from people whose job it is to take their companies apart and put them back together again. And to a certain extent, we would expect to see some version of evasion or euphemisms or cliche usage in this kind of conversation. We expect management to go back to what their core issue is that they want to talk about as redirects from tough questions where they might present an answer but want to pivot back to the fun news of the day. What's important is to remember that the outlier events that we consider to be less normal, not necessarily worrisome in all cases, that's where we help you focus the attention on what actually matters. So in cases where there are substantial spikes in deception scores for particular companies at particular points in time, those would beg scrutiny from an analyst community, whereas the normal levels of evasion might be enough to squeak by as a management team. Going a step further, the toolkit and the metrics that we're producing in terms of scores and how we allow you to access deception types, topics, and inline context at all levels, it allows you to explore things like deception at the extraction level. So thinking about on a sentence basis, how severe is a comment? What kind of deception is it? And how do you think about that in context? It also allows you to do it at the company level, where we provide a company level summed weighted score of the deception events contained within a transcript for a particular company's earnings call. It also allows you to do it comparatively, where a peer group going through the same circumstances in a marketplace should potentially face the same business circumstances. And if one company is being more or less deceptive than its peers, or than other companies that are in your own defined basket of goods by way of a portfolio you might be managing, that might be an indicator that that company needs a little bit more of your attention. And importantly, we also allow you to look at these types of data points over time, where again, baselining what normal deception looks like for a company over its longer term history matters. And that really is the key to identifying what the outlier cases are and where these kind of deceptive event type occurrences really beg for further scrutiny. So I'll pause there for a second just to say, if there are any questions along the way, we've got a chat function in the webinar where you should be able to submit questions. We'll come back to those at the end in the Q&A. And if there's anything that pops up, I've got a couple people in the room here who will wave a flag at me and say, hey, we've got to address this right now. But for the moment, what I'd like to pivot to are two case studies where we're going to walk through how you might think about the analytics we're producing on deception with respect to two companies. The first, I've elected Southwest Airlines. I used to be an aerospace and defense analyst, and so for me, this one's relatively familiar, but also for most folks, they know something's going on right now with Boeing 737, and whether they know it or not, Southwest is a pure 737 user. So the rationale for presenting this to folks today is that you'd understand why there'd be a healthy bit of uncertainty right now for a big Boeing customer. And that's really what we want to start with. I like to present a case in which there's an intuition about what deception means for that particular case. And we'll come to another company that may or may not be as obvious to folks right after this. So when we flip to the first page here, what I've lined up is the fact that with our deception model in the analytics, we're detecting deceptive language by Southwest management that suggests substantial levels of uncertainty about topics that are key to this business. In this particular case, that relates to one of the key aircrafts for its fleet. At the time of the Boeing 737 grounding, Southwest had only taken delivery of a handful of the new MAX aircraft. If the grounding had occurred a year later, they'd have over 200 of these in their fleet, and it would have been a gigantic issue for them to deal with, not that it isn't now. So in the case of a massive fleet refresh, it's no wonder that the 737 MAX is one of the key topics that we find triggering deception. But just to walk you through how we do this analysis, we'll take a look at the page that you're looking at right now on your screen. In the left-hand box, I've included a couple of top-line analytics that we provide. One is the deception score for this particular quarter's earnings call, which in this case is 190.5, which is a 75.5 point increase over the following line, which is the long-term average. So again, in thinking about what is normal for a company, we provide a baseline measure, which is the trailing 35-month average for the deception score for this particular company. In this case, it's a pretty steep jump. And we also provide a little bit of context in which in the transportation sector, you see that Southwest is the #1 most deceptive company this quarter against its peer group in terms of the GICS codes. When you look down a little bit further in this box, you see how we break down the score components that are weighted into our overall deception score. You see evasion appearing as the most important deception type in this case, with euphemisms and refusals and qualifying language to follow. And the top deception trigger topics are a function of our ability to look at not just what type of language are people using, in other words, are they being deception, but tying that to topics that are asked about in these calls to contextualize what is driving the deception in this conversation. So in this particular case, we see the MAX really driving a lot of this conversation, and it's no wonder given the particular business case. As we shift over to the right-hand box, we provide in this slide a handful of illustrative deceptive commentary extractions where you can see clearly what we mean when we say euphemisms, evasion, and refusals. Starting at the bottom, a pretty clear-cut refusal is, we did, as you know, well, we're not going to get into that either. The willingness for management teams to steer away from a conversation is often captured here. Looking to evasion, you see reasonably clear-cut cases as well of folks saying, I don't know that I have as much of a perspective there, or I don't know what else it would be. I'm not sure what percent, but a massive percent of our itinerary has changed. This willingful redirect from answering clearly is a big issue here that we see on the left in terms of the weighted score. And then a euphemism at the top where the short answer is right now, we don't see that we need a change in strategy. This is an interesting statement in light of a big picture issue facing the company here. So at the top level, this would be the quick take on, sure, we've got a big score here, but what types of deception are occurring? What are the trigger topics that are actually leading to that deception? And then what are some proofs in the text for how we're thinking about what these deception types are? Going forward, to address some of the other dimensions we've mentioned so far, we can think about looking at Southwest's score over time. So we can see in the last couple of quarters, the red line, which represents the deception score on a quarter basis, to be going through a major spike since the 737 grounding. This is not that big a surprise, and again, it should feel familiar to anybody who knows the company and knows what's happening in the marketplace. The goal here is to demonstrate that we are capturing the truth here, and that's really what matters, that there's a very healthy amount of deception about a huge issue facing this particular company. But to give you a flavor of just what that looks like for the broader sector, we can also show you in context on an XY plot here what the current deception score is in the x-axis versus the score change in that current quarter over long-term average on the x-axis, where we see Southwest is a true outlier against most other airlines that are visible in this field. So just to give you a quick flavor of what that really means on a practical level, we know in this case that Southwest is facing this traumatic issue related to a core plane that's in their fleet, whereas Delta happens to pop up in the bottom left-hand corner of this screen with a much milder deception score and a bit of an improvement over their long-term history. And the pros who might be following this sector would know that Delta has very limited exposure to the 737 MAX right now, and they're sort of counting their lucky stars in terms of not being so worried about the fleet refresh at the moment. So just a little bit of context there for thinking in context about what companies look like versus their peer groups. Again, looking at that over histories and thinking about at the actual extraction and type level, how we identify what deception looks like in these calls. We'll fast forward to the next case study, which is on the Altria Group. Taking a quick look under the hood, We detect a whole bunch of deceptive language by Altria Group executives that's focused particularly on the Juul acquisition and product line and the FDA's pre-market tobacco application rules after the company announced the acquisition of Juul at the 35% level back in 2018. What's interesting here is we see a company going through a really nitty-gritty process with the FDA and trying to bring a product to market and keep it there. And the uncertainty surrounding that issue seems to be quite massive and seems to be leading directly to evasive commentary. So what we gather here is, again, a top-line deception score level on the quarter of 130.77, which is a 57 and change score change between the long-term average of 73.47 in this current quarter. And again, putting that in context, thinking about, this should say tobacco, apologies for that, instead of transportation for the sector, but they're number 2 of 61 in their sector this time around. So not quite that same number 1 rank as Southwest, but pretty high up on the list. What we see here is a real concentration of deception types where we see a lot of evasion and a little bit of a scattering in terms of euphemisms, refusals, qualifying commentary, and detours. But again, it's those top trigger topics that really tell us what the conversation's about and where the inherent uncertainty is coming from in terms of when we're not getting straight answers to topically oriented questions. And again, that comes back on the Juul product and acquisition, the PMTA process with the FDA itself, the US market, and a whole bunch of other issues that are affecting this particular space. And you see similarly in the deceptive commentary, sort of illustrative abstractions on the right, the exact same thing that we might expect to pop up in these cases. Classic evasive topics of saying, I don't know, and I think it's hard to determine. These are sort of textbook cases where folks are avoiding answering the questions. The euphemism case of, I think overseas it's still early days, and the refusal case of, we don't share that level of detail. These are very similar to what gets captured in other companies. But in this case, again, we see that huge concentration in evasion as a deception type. And when we look to it over time, we see a similar climb. We notice that over the last couple of quarters, we've seen a market increase in both the deception score and the number of deceptive event counts that we are able to detect inside the earnings call transcripts. And a lot of that is due to the recent uncertainty since the beginning of the year about the Juul acquisition and the future market prospects for the product line. And no surprise, shares currently are trading 6% lower on a year-to-date basis in light of a lot of that uncertainty that's driving concern about their product lines. In addition, we can take the same high-level look at the peer group, where when we load up all the tobacco producers that we have available in the platform, we see Philip Morris, Turning Point, Vector, a whole bunch of other folks hanging out in that bottom left-hand corner of the screen, with Altria showing up in the top right as an indicator that A, their deception score is much higher than the peer group, but also their change against the long-term average is substantially higher. So those are 2 quick walkthroughs just of how we think about these analytics get tied together in terms of explaining a particular outlier case and how you might interpret some of these metrics in any given direction. One might start with the topics that are important, one might start with some of these event types that they think are key drivers, or you might go investigate based on a sector, based on a particular company of interest, or based on a broad-based view of all companies reporting for a quarter. And what we'd like to do is take a moment to show you exactly how that works with our product toolkit. This is the deception dashboard that we're proud of as a product, and I'm going to tabulate over now to a web interface, which is how you engage with the particular product. So let's load it up here for fun. And again, I'll pause for a second for folks to submit any questions they might have so far along the way. I'll look over at Richard here and see if there's anything that's popped up immediately, but so far I'm getting the nod that everything seems to be going a-okay for now. So we'll carry on and play with the tools a little bit so that you get a sense of really how sharp they are in terms of measuring what we're looking at. So what I'd like to do just at the outset is load up the exact cases that we've just studied. So for example, if I was curious about all companies that are publishing inside this quarter across the entire spectrum, how might I actually use this interface? And so I'll go through a page-by-page introduction just in terms of what we present, how the tools interact with each other, and what the real value add is. At the top level, we offer a page called Deception Analysis, where we are presenting that same scatter plot that you saw on the previous slides, which is tracking companies' current deception score against their score change versus their long-term average. This is an easy way to visualize what's happening in a complex space where lots of things are happening along lots of different lines. And the ability to filter dynamically on this space is really what's an awesome driver from the fundamental analyst perspective. So for fun, I'm going to steer through just for a second so you can watch this change. I'm going to go to published dates that have happened inside Q3 2019 on a calendar basis. And I'm going to search for a sub-industry in airlines. And as I commit these, you're going to see different names populate over time. And what we grasp immediately is the same finding, not filtering on anything except for events that have happened this quarter and the airline sector, to see this really clear crystallization of what we were talking about in terms of Southwest's outlier status. In addition to having this multi-company ability to target in a particular space, you know at the same time what topics are driving deception in the second visualization to the right in the middle column, and also the types of tactics that are popping up in terms of deception types. So thinking about evasion, euphemisms, detours, refusals, and so forth. And for whatever you've selected in terms of filters, you also have the ability to see over time what the overall deception levels and event counts look like for those particular selections. Now in this case, what we want to get to is Southwest as a target. So I'm going to click here on Southwest, which will change the filter to that particular company name, in which case we're all going to see exactly what we demonstrated in the slides before, that the MACs and issues about it are driving the deception around usage of evasion with a clear spike over time in terms of the deception that this company is exhibiting. When we move over to some of the other pages, we have the ability to interact on different levels. This page is the ranking overview. If I clear out Southwest's name one more time, we're going to take a look now at all airlines that have had an event in terms of an earnings call during Q3 2019 on a calendar basis. And what we see is a ranking of the biggest deception changes here in this dropdown, where we see Southwest is the biggest change over their long-term average. We can also filter by highest overall deception, in which we're looking at the score itself, not necessarily the long-term change. Southwest, again, taking top of pack status. And you have the ability to go into the deception scorecard and look at some of the raw data that we provide.
Just a quick sidebar, and the question is, how do we identify topics, and how do we connect those topics to deception?
That's a great question, and I think what we'll answer that with is a demonstration of how you get into the detailed data view, which again is at the absolute core of everything we do here, the transparent ability to go to the data. So we'll back up a page here just for a second, and we'll take a look again at Southwest as a particular target. So we're going to select the company inside of this view here, and I'll demonstrate by going directly to the detailed data that we provide. So on an extraction basis, we are providing all sorts of information that you have access to here in the detailed data view, including the date, the company, the ticker, the industry group, sub-industry, and a variety of other data here. One of the key areas is the topics as we've identified. I'm going to slide this over towards the deceptive language column, which is where we highlight the exact extractions we're talking about and the questions that have led to them. So when we're talking about the MACs, we have the ability to filter through in here, and we can show you dynamically as we move through the dashboard. We're going to highlight all the topic categories and combinations that highlight the MACs, and we're going to see that really these are conversations in a question and answer basis where the MACs is of issue. So that topic is either coming up in the question itself or in the answer. And the ability to cross-reference that can allow you to filter based on a particular topic here and looking at exactly what questions are asked, by whom, to whom, and what the answer that provided is in that particular case. My hope is that's the answer to the question, but please feel free to throw more questions in that Q&A. Let's see what we've got.
So we have a follow-up question.
Sure.
Was your NLP model trained on topics like the MACs, or is it able to understand new topics?
So the ability to recognize new topics is key to this. So we're not going in hitting Control F for things that we think matter. It's really what is being mentioned in the text itself. And that's core to the ability to do things like topic discovery as a fundamental analyst, to go in and say, hey, what I'm curious about is what are the actual semantic words that are popping up and driving deception inside these extractions that we know.
Another follow-up question, do we offer trials? And if so, how are they arranged? I can address that.
I think I'll let Richard answer that question.
Yeah, so we do offer trials, and we offer different kinds of trials, in fact. We can offer sample data. We can offer, for sake of structure, we can offer historical data for sake of an understanding of and giving our customers a chance to sort of do some work with that data, let's say on the quantitative side of things. We also offer trial access to the platform that Derrick is showing right now. We'll do that for a limited time basis as well. We even offer sort of a try before you buy, kind of a rollover period, especially where we're considering sort of POC/customized solution. And that would be inclusive of an API deployment, you know, or even our some kind of a hybrid with our off-the-shelf version as well.
Yeah, I think the important thing to remember too, as I've sort of become the internal pro user, is that a lot of this is transformations based on core data that we can provide access to in a whole bunch of different ways. So this is one implementation where we're looking at making deception accessible to an end user who might not be able to be, you know, pulling down API calls and building their own dashboards. We've got some great out-of-the-box tools that can allow you to interact with this data directly and immediately, while also retaining that transparent edge of being able to understand what we're talking about as extractions in context, with the key being the ability to interpret what we're saying matters, not just trust an out-of-the-box score. So I'll just continue to walk through some of the pages in the dashboard to give you the full flavor of what we're offering. Again, we have the detailed data page, which is always going to allow you access to anything that you've filtered on. The ranking overview allows you to look, once again, at a sector in particular or at the entire marketplace in particular. So if we look at, for example, the entirety of Q3 2019 earnings calls in terms of the calendar date, we see a couple of names pop up here that you may or may not be familiar with. I happen to be the accidental expert now on 1&1 Drillich, which is trying to make a play for 5G network expansion in Germany. And their CEO went out at the beginning of the summer and spent about $1.2 billion on spectrum. And so a lot of what drives the issues for them are interpretation, investment, price, and 5G issues related to that big picture investment. We'll pause for another question if there's one here.
So the question is your analysis purely of the Q&A? And if you include the presentation, how do you narrow deception to a specific topic?
So again, in the detailed data, you'll be able to see this clearly, which is, let's go over again. I'll select Southwest one more time as the company just for fun. And when we go to the detailed data, you're going to notice that some of these extractions don't have questions associated with them, which is usually the tell for something appearing inside the prepared remarks. So we are capturing prepared remarks and comments that happen inside. And the topic extraction works the same way, where we're looking at deceptive commentary and the issues that are actually talked about in that context. Any other questions?
Yeah, so another question is there a value in looking at the deception event types themselves? Or is the main value about the overall score?
That's a great question. I have some interesting thoughts about this. I'm particularly fond of looking for issues where there's hostility popping up on this deception tactic, only because there's a certain degree of professionalism I used to expect as a fundamental analyst in a company who would be invested in a company. One of our favorites of all time is looking back at old Tesla calls where Elon Musk might be, really chewing out an analyst. But we saw that again in the slides where there was only one hostile comment made this entire quarter, which we highlighted in the deck, which I could pull up one more time just for fun, which was by the, let's see where we are. Yes, it was by the CEO at CSX, which was the "Allison, you're killing me" comment, which is, classic in terms of a transcript. My hope is it was said in jest, but the reality becomes when you look back at these things historically, it's tough to tell. And that's the reality with studying lots of companies and over lots of time in terms of thinking about long time samples. It becomes really important to have the ability to objectively measure these things. Any other questions? Richard's nodding his head yes.
Yeah.
Well, I'll let them line one up for me, but in the meantime, I'll show you one of the other pages inside the dashboard here. We'll go back into Southwest Airlines, just as one particular company we've been riffing on, and we'll go not just to that ranking overview on a sector basis or a multi-company basis, but also inside the company scorecard, where we provide direct access to the company's deception types as they're counted in terms of the deception scores here on the bottom left, and then the bigger picture view of how that deception score and the event counts are changing over time, with an easy to interpret word cloud down here at the bottom, identifying which of these topics, again, are driving deception. The importance on this page that I can't underemphasize for some of our current users is that this is where we're showing you the information in the top left about the deception increase versus the long-term average and the rank against the particular sector. So that's where you're seeing that Southwest is popping up as #1 of 70 inside the transportation sector in terms of deception this quarter, and that the deception score increased 75 over a long-term average of 115. Any questions?
Yeah, so I have one here. Oh, we just moved away from it. Where'd it go?
So in the meantime, we can run through some other fun examples where, let's say we wanted to dig in to a sub-industry that included something completely different than the airlines I've been focusing on as the old airline guy. We might look at any different level of a GICS code where we have all 4 altitudes of sector breakdowns, where we have the sector, the industry group, the industry itself, and then the sub-industry. At the top level, we might be interested in consumer discretionary. We might want to look at those companies in this sector that have reported this quarter to get a sense particularly of what's driving deception within these firms. And here we see across the sector issues related to margins, price, cost, revenue, and sales affecting companies. If we want to drill down further into, for example, consumer durables and apparel, and drive down even further perhaps into some textiles, apparel, and luxury goods, we can get dynamic breakdowns of how all these things relate to each other on the fly as we go. One of the significant filters that we've added recently is on market cap, where you have the ability to look at companies of a particular size as and when you'd like to. This allows you to filter out some of the noise if you're not a small cap investor, where you might only have certain names in your investable universe, or vice versa for those folks who may not be mega cap investors, but who might be focused on more micro and small caps. So when we filter on market caps in the larger size within the textiles and apparel space, you see Under Armour popping up, no surprise given some long-term concerns about strategic vision there. But Columbia showing up in a nice little improvement against the long-term average with relatively low deception. So there's a lot of ways that you can go about investigating this, but the key becomes you have constant access to the high-level analytics here and the ability to toggle back to the text as and when you need in the detailed data view to either substantiate what we're saying so that you trust us, but also to make more inline interpretations that might directly influence your particular investment thesis or rationale for doing this kind of investment research.
Okay.
Any other questions?
We do, yeah,
Sure.
and we finally got it to come up. Today's webinar is specifically on deception scoring. So the question is, are there any standard product features that indicate the general positive or negative tone of business direction?
Sure. So in another product, which is the viewer, we've had another webinar that touched on this as well. We may do another deep dive on that particular product to give you some more clarity around that. We produce an amenity score for each company, which is an indicator of the overall positive and negative sentiment related to not just deception as an event type that we capture, but a lot of the other key drivers that we're seeking to detect, measure, and provide in an accessible manner inside a fundamental model that captures lots of other content. So deception is very important in terms of what we're trying to measure that's truly qualitative and tough to measure. And that lines right up with the other qualitative tough to measure stuff that we think about when we put the fundamental analyst hat on in terms of things like cost-related issues, price-related issues, customer acquisition, you name it, all the other big key drivers that might be fueling your investment case.
So here's actually a specific question. I guess on one of your screenshots, a viewer noticed that Alaska Airlines has a particularly low deception score.
Sure.
Can you show more what is driving that low score?
We can. Let's drive into it here. So we'll go back to the airline view for a second, and we'll go over to Alaska. Now, I'll self-confess, I'm not fluent on what's going on at Alaska right now, but the substantial thing to remember here is that all of this is important relative to whatever your interest is being driven by. So if you are an airline exclusive investor and you're curious in going with straight shooter management, who's less deceptive than the peer group on a relative basis, these guys look to be positioned relatively well, all things considered. And remember, what we're seeing here is on the x-axis, that score change over the long-term average for this quarter and the current deception score. So what I'll do is I'll toggle in here and lock in Alaska and just show you again on that company scorecard page what this really looks like. So on the long-term average, compared to the high 100s that we were finding with some big outliers, we see a deception decrease of 57.2 from a long-term average of 81.4, ranking them quite low in terms of what their overall sector is. And if we go back, I think one of the cool parts of this again is the ability to toggle between time views. So right now on this particular page, we're seeing that we've selected Alaska and we're seeing at the top level what topics are driving deception right now. What we might be interested in looking at is in the prior quarter, what were driving deceptive commentary then? And so if we highlight here on a quarter basis, we're going to see a different set of topics line up because we've selected a different event period. And so we're going to see a concern about Southwest, RASMs, our revenue, US and United and economy issues that were driving some of that deception. When we flip over to the current quarter, we see some of those issues settle. So the question for a fundamental investor in this case would be either why are those issues no longer driving deception, which is a reason to, as a subject matter expert, dive into, is somebody just not getting the question? Is it not being talked about? Was there a market event that may have settled the complex issue that a company was facing, et cetera, et cetera. But again, the ability to toggle back and forth between quarters and quarters, you know what's driving deception at any given point in time. So a spike back here, when we're looking at Q4 2017, was particularly related to cost, whereas in the current period, when we go back to Q3 2019, cost doesn't pop up nearly as high. So that, as a key driver, either suggests that there's more certainty around that issue such that it might be mentioned in other ways with less deception, or that it might have disappeared from the conversation by being a solved problem.
One more question here.
Sure.
Have we undertaken any wide-scale backtesting in terms of impact with stock price movements? Yeah, and I can address that. As a matter of fact, we haven't really done that kind of backtesting as much as we've seen some of our clients actually do that on our behalf. And not only are they backtesting, but they're even publishing on their results. So whether that's Evercore or QMA or Bank of America, they've all published with clear impact on improved return based on the usage of deception in their research strategy and their models.
Mm-hmm. Yeah, I think anecdotally, some of the fun examples that folks have passed around the office seem to indicate that the cool cases are really where deception spikes at the same time the stock price does, which is a successful pitch on an evasive move by an analyst or by a management team maybe. But the curiosity becomes really what are the longer term effects? And so this is something that I know we're thinking actively about in terms of me generating some content, putting these tools to the test, which is, let's talk about what happens next after this deception occurs. And that's where, in the case of, for example, the Altria Group case that we mentioned in the deck, a lot of that uncertainty, that's leaving Altria's stock price right now somewhat in the doldrums. They're sort of sitting listless in the wind, trading relatively flat on a year-to-date basis. For longer-term cases, it's very curious to track that sort of an issue and how it affects shareholders. Any other questions in the hopper? Okay, so we're coming up on time. So what I'd like to do is go back briefly to the PowerPoint presentation we've got here and steer back forward to where we left off. Let me zoom out to get there a little bit quicker and talk to you a little bit just about how to access these tools and what happens next. For our existing clients, it's relatively easy for folks who are in our system with a login and have access to the deception dashboard. It's a pretty easy get. You're logging into one of our core products, the viewer, and you'll see on the left-hand side of the screen a small little icon with a graph and a line, and that's going to be our analytics tab in which you can access the deception dashboard. But the other big picture cell and sort of how I spend my day-to-day work is in drafting some deception spotlights. When we highlight things that we think are worth some scrutiny, that we blast out to our customer base selectively and in a highly curated fashion. One example, we happen to write up a piece that we put out on the 31st of July ahead of the Fed rate decision looming on softness in regional banks as measured by deception, in terms of the frequency of occurrence of deception in some of the earnings calls on major regional banks in the United States. And what we detected was substantial deception related to core issues and commentary around things like net interest margins and net interest income in a changing rate environment. And it's no surprise that a couple of weeks later, Wells Fargo gets mentioned in Bloomberg because their analysts are rating down some of these regional banks that are soft on the exposure to the rate environment. And so, our hope is to be proving how these things are useful in real time as we're building out better and better tools, really putting them to the test to prove that the efficacy of a tool works today and tomorrow. So if you are receiving these emails, fantastic. We'd love to hear what you think about them. So please do email all your kind comments to me and all the criticisms to Richard. And then if you're not receiving these emails, but you think you should, please check your spam filter or reach out to us at either the email addresses below. Or if you're interested in starting a new subscription, if you're one of the prospective clients who happen to be dialing in today, that's another ask that you reach out to us. We'll have a conversation about what your needs and interest levels are, and we can move on from there. So with that, if there's any outstanding Q&A, I'm happy to dive into it in any way you guys prefer. Otherwise, I'll pass it back to Richard for next steps from here.
Right, yeah, and just confirming no questions. Thanks, Derrick. So from here, we have certainly we have a recording of this webinar, which we'll have on file for registered attendees of the webinar in the case that you want that. Feel free to email me at richard@amenityanalytics.com in the case you'd like to set up a trial or perhaps a follow-on demo for you and your colleagues. Otherwise, just wanted to thank you very much for your time and look forward to speaking with you sometime on the other side.
All right, thanks so much, everybody.